Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management. Well, this has been a week for the record books. A total of 3 stocks have reached and exceeded, marginally, the magic $3 trillion market capitalization rate. Microsoft, NVIDIA, and Apple, yet again. The last two, I have to say, just barely. Conjoining the 3 stocks is their vital connection to or with artificial intelligence, AI. Admittedly, Microsoft and NVIDIA are more directly involved here, as Apple is only promising to get fully immersed. However, these days, does a company need any more than that? 2 weeks ago, we looked at the first quarter earnings, and all the FANGs, save Tesla, came through with flying colors. Last week, I observed that, as Wall Street lore has it, buy the expectation and sell the news, and we saw some profit taking. But this week, all is forgiven, and almost all the FANGs have rebounded to some extent. In any case, no sell signals were triggered in the brief sell-off, and so the SVA methodology is maintaining its buy-hold ratings on every one of the FANG stocks, except for Tesla, which I personally and perhaps doggedly rate as a sell. Today will be therefore more of an updating than a call to any urgent action. So let's take a close look at all the FANGs and what went on this past week. As always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. And if you'd like to learn more about our valuation service, go to www.strategicanalysis.ca. Okay, on to the FANGs, and let's, never mind the Magnificent Seven, let's look at the maybe the Royal Three, I guess, those with $3 trillion market caps. And the first one here is NVIDIA, and it has moved right up to its HB8. That is 54 times its book value. That is one extreme, that's for sure. But look, hey, the earnings estimates are even ticking up even here as we speak, and of course they are promising a share split. So hanging in nicely, threatening a breakout, but we haven't seen it yet. Microsoft just continues to move nicely up along its HB2 price. That's 12 times its book value. Again, you know, we look at the earnings and the fair market value trend. It's just kind of moving nicely higher, but nothing terribly promising. The stock has not been able to break out above its HB2 price yet, and I don't know when it will. And finally, Apple here. If I just lay this my cursor along here, you can see the dotted line, providing that the company is still buying back stock. Okay, then the stock looks as if it may be breaking out over its HB6 price, which is 33 times book value. We'll need to see. Amazon just moving nicely along and above its bubble price at 7.4 times book. Note, of course, that it did tuck down there once. And it's kind of tucking back there again, but again, look at the trend of the fair market value, and it's kind of ticking up there. I suspect that the bubble price will hold. And maybe this will be an opportunity for a nice little trade. Alphabet is moving up very nicely, and of course you can see based on its very strong earnings number that its earnings forecast and its fair market value are ticking up. It still has not been able to break out above its bubble price, again 7.4 times book, and that is an old high going back at least 12 years. So it's getting there, hasn't got there yet. The promise is there, but we'll have to wait and see what happens at its bubble price. It's not a guaranteed breakout by any stretch of the imagination. Netflix, again on very, very nice numbers, is moving back up to its HB2, that's 12 times book, where it actually stalled out before, although that was not the all-time high. The all-time high actually was 2 breakpoints higher. So if it can break out here, there's room to go, if it can break out here. Meta is the conundrum, isn't it? Okay, look at that. It's just trading either side of its bubble price, and we know why. I mean, because I've showed you a number of times that that is where the stock has peaked 3 times in its history, and it is having the devil's own time trying to break out from here, I think, because of it. Remember what I've said before, the market has a memory. Finally, Tesla is just threading the needle between its bubble price and its HB1, which is 9.5 times book value. In the meantime, I have to observe that the earnings and the fair market value continue to slip underneath the stock. It is not a stock given the intensifying competition that I would care to own. But nonetheless, we don't have a break below its bubble price for those people who may be hanging on right now. So to recap briefly, what happened last week, and more to the point, why? It should be noted that while the promise of artificial intelligence has caused share prices to soar, it is not yet providing much of a lift to general revenues. According to recent number crunching by venture capital firm Sequoia Capital, tech companies spent $50 billion on NVIDIA chip last year in order to train AI models. However, the surge in capital expenditures has only netted $3 billion in additional sales. In reality, today, most AI workloads actually take place in data centers owned by companies like, well, Microsoft, of course, and Alphabet. And I have to note that both companies have cut hundreds of jobs in those business units earlier this week. So even the direct beneficiaries of the artificial intelligence phenomenon are tightening their belts. It is, or should be, enough to at least warn investors that these superb valuations and soaring market capitalizations do carry some risks, and we should pay close attention to the SVA charts. Not that we are seeing any signs of FANG share breakdowns yet. So this is not a shot across your bow. But very high valuations have historically not persisted forever. So to stay tuned to FANG Friday, the 10 minutes or so of your time that I take up every week may be a very small time price to pay if, as, or when any of these behemoths start to take on water. Looking at the 3 behemoths specifically, NVIDIA has made a run for the roses and is close to a possible breakout over its HB8 level. That's 53 times book. Looking ahead, the planned 10-for-1 stock split may carry the day. So do keep an eye on these shares. I will have more to say on this subject next week, however. Microsoft is just moseying along, stuck below its HB2 resistance level. It does not even look, to me that is, as if it is actually even really interested in a breakout. Mind you, riding that HB2 price, 12 times book, is good enough to provide some quite decent returns. Finally, Apple is promising to unleash an AI reign of terror on the global markets. But to date, we have seen no evidence that it is doing so. And sales and earnings are just slogging along. Worse, those promised share buybacks are nowhere in strong evidence either. Personally, Apple kind of makes me nervous. Amazon, Alphabet, and Netflix are in comfortable positive trends, although Alphabet and Netflix are reaching uptrend boundaries, and perhaps we will be needing to make some decisions when they get there. Meta, I really don't know what to say about Meta. To paraphrase a long ago TV advertisement for Kleenex table napkins, it's clinging like cloth to its bubble price, that 7.4 times book. It and Alphabet are the two cheapest of the FANGs, but Meta does not seem to want to break out into new absolute high valuation territory for the stock. And Alphabet is just oozing up to its absolute high as well. That leaves me with Tesla, and the industry fundamentals are nerve-wracking. Despite a somewhat worrisome news background, the stock is hanging in above its bubble price, 7.4 times book, despite its sagging fair market value trend. It still looks as if the market is hoping, maybe, for yet another surprise announcement from the company. With no sell signals and everybody still riding their positive channels, I still expect a positive start to the market heading into the summer. Anyway, that's it for this week. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.